In November 2024, China did something it had done 18 months in a row. The People's Bank of China added gold to its reserves. Then in December, it did it again, and again in January 2025. By June 2025, that streak had reached 8 consecutive months of purchases. Month after month, China buys gold, not occasionally, not when prices dip, every single month. As of January 34, 2025, China's official gold holdings stand at 2,280 tons, accounting for 5.5% of total foreign reserves. But here's what most analysts miss. That's just the official number. According to independent estimates, China's central bank is currently sitting on more than 5,000 tons of monetary gold when you account for hidden purchases. That's more than twice what they publicly admit. This isn't random. This is a pattern. And if history has taught us anything, it's that when major powers shift their reserve strategies, currencies collapse. Every fiat currency in history has failed. Not most of them. Every single one. In 1923, Germans needed wheelbarrows of cash to buy bread. At its peak in Weimar Germany, prices doubled every 3.7 days, and inflation reached 29,500%. Workers were paid twice a day because their money lost value by the hour. People used currency as wallpaper because it was cheaper than buying actual wallpaper. Fast forward to 2008, Zimbabwe. By November 2008, Zimbabwe's annual inflation rate reached 89.7 sextillion%, with prices doubling every 24.7 hours. The government printed a $100 trillion banknote. It couldn't buy a loaf of bread. Venezuela, 2018. By October 2022, Venezuela's annual inflation rate was 155.8%, and that was after they officially exited hyperinflation. At its worst, people were hunting dogs for food while the government blamed everyone but themselves. Hungary after World War II experienced the worst hyperinflation ever recorded. In July 1946, prices doubled every 15.3 hours with a monthly inflation rate of 41.9 quadrillion%. The largest banknote was 100 quintillion pengu. The pattern is always the same. Governments print money to solve problems. Confidence erodes. The currency dies. And when a currency dies, societies fracture. The US dollar has been the world's reserve currency since the end of World War II. As of 2024, the dollar accounts for 59% of global foreign exchange reserves. For decades, that dominance seemed unshakable. But dominance isn't permanent. The British pound was once the world's reserve currency. In 1948, the pound accounted for twice the global reserve share of the dollar, but by 1969, the dollar had overtaken it tenfold. By 1980, the pound had declined to just 2% of global reserves. Economic dominance follows economic power, and economic power shifts. Right now, the dollar is experiencing what analysts call de-dollarization. Between 1999 and 2022, the dollar's share of global reserves declined steadily. That decline has accelerated. As of early 2025, foreign ownership in the U.S. Treasury market has fallen to 30%, down from a peak above 50% during the global financial crisis. China is leading that shift, not through speeches or threats, through gold. Between November 2022 and April 2024, China added 316 tons to its gold reserves, a 16% increase over 18 months. Then in 2024, they paused official announcements for several months. Many analysts thought China had stopped buying. They were wrong. In November 2024, China resumed official purchases. From November 2024 through June 2025, the People's Bank of China added 520,000 ounces, approximately 16.17 metric tons, to its reserves. But the official numbers tell only part of the story. Gold exports of 400-ounce bars from the UK to China go straight to the People's Bank of China. When you track these shipments, a different picture emerges. From the third quarter of 2022 through the end of 2024, China's central bank surreptitiously bought 1,800 tons, which is 5 times more than what's officially reported. Why hide purchases? Because announcing large gold acquisitions drives up prices. By buying quietly through London and other channels, China acquires gold at lower costs. It's not deception, it's strategy, and it's working. In 2024, the Chinese central bank covertly bought 570 tons. That single year of hidden purchases exceeds the annual gold production of most mining countries. Gold isn't just an investment for China, it's infrastructure for a post-dollar world. China's gold share of official reserves remains relatively low compared to major Western economies. The United States holds 8,133 tons, Germany holds 3,351 tons, France holds 2,437 tons, China officially reports around 2,280 tons, though actual holdings likely exceed 5,000 tons. Even at 5,000 tons, China's gold represents a smaller percentage of total reserves than most Western nations. This creates room for continued accumulation without triggering alarm. Every month, China adds more. Every month, the foundation strengthens. But China isn't alone. In 2024, central banks collectively added 1,045 metric tons to global gold reserves, marking the third consecutive year that annual purchases exceeded 1,000 metric tons. Russia, India, Turkey, Poland, all buying gold, all reducing dollar exposure. The pattern is clear. Eastern nations are converting dollar-denominated assets into gold, slowly, methodically, month after month. In October 2024, BRICS nations met in Kazan, Russia. On the agenda, reducing dependence on the US dollar. They discussed BRICS Pay, a payment system for settling trade in local currencies. They talked about alternatives to SWIFT. They explored mechanisms to bypass Western financial systems entirely. Brazil and China signed a yuan real trade settlement agreement in 2023, and India has begun purchasing Russian oil in rupees. In 2024, 90% of Russia's trade within BRICS was in local currencies. These aren't proposals, they're operational systems. The rhetoric at the 2025 BRICS summit in Brazil was more muted, reportedly due to concerns about US tariff threats. But the infrastructure continues developing beneath the surface. Cross-border yuan settlement increased to 32% of China's trade in Q2 2025, up from 28% in Q4 2024. Gold provides the ultimate backing for these alternatives. When currencies are backed, even implicitly, by gold reserves, they gain credibility. China understands this. Russia understands this. The entire BRICS bloc understands this. President Trump has threatened 100% tariffs on BRICS nations if they pursue de-dollarization. Brazil's President Lula responded bluntly that BRICS remains committed to ending dollar dominance regardless. The geopolitical battle lines are drawn. Gold sits at the center. Currency collapses don't happen overnight. They happen in stages. Stage 1, confidence begins to erode. People notice inflation. They question monetary policy, but the currency still functions. Stage 2, alternatives emerge. Some businesses start accepting foreign currencies. Some people convert savings into hard assets. Gold sales increase. Stage 3, the tipping point. A critical mass of actors lose faith simultaneously. Foreign holders dump reserves. Domestic holders flee to safety. The currency enters freefall. Stage 4, hyperinflation. Prices double weekly, then daily, then hourly. The government prints more to pay bills, accelerating the collapse. Society fragments. Stage 5, replacement. A new currency, a foreign currency, or a return to commodity money. The old system is abandoned completely. The dollar isn't in stage 4. It's not even clearly in stage 3. But stage 1, we're there. The dollar's share in FX reserves has slid to a 2-decade low of just under 60%. Foreign governments are diversifying away from dollar assets. The foundation is cracking, and China is preparing for stages 3, 4, and 5. Some economists argue the dollar is too big to fail. They point to network effects, market depth, and institutional inertia. They're not wrong about those factors. But they're missing the fundamental shift. For the first time in modern history, a coordinated bloc of nations representing over 40% of global GDP is actively building alternative systems. BRICS states reportedly hold over 42% of global central bank foreign exchange reserves. That's enormous leverage. For the first time, technology enables real-time settlement in multiple currencies without dollar intermediation. Digital payment systems, blockchain infrastructure, and automated currency exchanges make dollar-free trade feasible at scale. For the first time, the world's largest manufacturing economy is aggressively accumulating the one asset that has preserved value across every currency collapse in history, gold. The United States still has advantages. The dollar's share of trade invoicing remains around 40%. Cross-border liabilities are still 48% dollar-denominated, but these are lagging indicators. They measure what happened, not what's coming. Western nations, the so-called first tier, believe their financial systems are invulnerable. They've weathered recessions, wars, and crises. They assume stability is permanent. History suggests otherwise. Weimar Germany was a first-tier economy, the most advanced industrial nation in Europe. 1 decade later, people burned currency for warmth because it was worthless. The Soviet Union was a superpower with nuclear weapons and satellite states. In 1991, the ruble collapsed. Lines for bread stretched blocks. An empire evaporated. Economic dominance is temporary. Military power doesn't guarantee monetary stability. And when major holders of your currency decide to exit, there's no floor. China holds an estimated $800 billion in U.S. treasuries. If they started selling, even gradually, the impact would be immediate. Interest rates would spike, bond prices would crater, the Federal Reserve would face an impossible choice: print money to buy bonds, accelerating inflation, or let rates rise, crushing the economy. But China won't dump treasuries tomorrow. That's not the strategy. The strategy is accumulating gold while slowly reducing dollar exposure, converting depreciating paper into appreciating metal, building a foundation for the yuan as a trade settlement currency backed by thousands of tons of gold. According to estimates by J.P. Morgan Research, each 1 percentage point decline in foreign holdings relative to GDP would result in yields rising by more than 33 basis points. That's not speculation, that's mathematics. If foreign demand for treasuries continues declining at current rates, interest rates will continue rising. The U.S. government's debt service costs will balloon, more borrowing will be required, more treasuries will flood the market, demand will fall further. It's a self-reinforcing cycle. Between October 2023 and October 2024, the price of gold rose about 40%. By September 2025, gold reached record highs 36 times during the year, with the Shanghai gold price posting a year-to-date return of 36%, the best year on record. That's not random volatility. That's global central banks hedging against fiat currency risk. Mohamed El-Erian, linked this rise to growing interest in exploring possible alternatives to the dollar-based payment system. When one of the world's most respected economists connects gold prices to dollar alternatives, you should pay attention. The fiat system isn't collapsing tomorrow, but the architecture for an alternative is being built today. Every month, another foundation stone is laid. Every gold purchased by China is a brick in that foundation. When does this matter? When does China's gold strategy become an existential threat to dollar dominance? There's no precise answer. Currency transitions take years, sometimes decades. The British pound didn't collapse overnight. It declined across a generation as economic power shifted to America. But the pace is accelerating. Cross-border yuan settlement has grown from negligible in 2015 to 32% of China's trade by mid-2025. That's exponential growth. At current rates, yuan settlement could exceed 50% of China's trade within 3 years. If China announces it's backing the yuan with gold, even partially, the game changes immediately. Every central bank holding dollars would face a decision: stay in depreciating paper or move to gold-backed alternatives. That's not a hard choice. China doesn't need to announce anything. The accumulation speaks for itself. Smart money is already moving. Central banks in emerging markets are buying gold at record rates. Sovereign wealth funds are diversifying away from dollars. The shift is happening whether anyone admits it or not. Fiat currency has failed every time it's been tried. The average lifespan of a fiat currency is 27 years. The dollar has been a pure fiat currency since 1971, when Nixon ended gold convertibility. That's 54 years. We're on borrowed time. Some will argue this time is different. The dollar has special status. The US has the world's most powerful military. Markets have institutional momentum. Those arguments were made about every reserve currency that ever failed. The pound had the world's most powerful navy. The Spanish real had the gold and silver of the New World. The French livre had Europe's most populous nation. All collapsed. The pattern always starts the same way. A dominant nation overextends itself. Military spending rises. Deficits balloon. The currency is debased to pay for it. Confidence erodes. Alternatives emerge. Then one day the tipping point arrives, and what seemed stable yesterday is worthless today. China is positioning for that day. They're not trying to trigger collapse. They're preparing to survive it. And when the dust settles, they'll have the gold. You might be thinking this is a geopolitical story that doesn't affect your daily life. You'd be wrong. If the dollar loses reserve currency status, imported goods become dramatically more expensive. Your purchasing power shrinks. Your savings, if held in dollars, lose value. Retirement accounts denominated in dollar assets could lose 30%, 50%, or more of their real value. The wealth gap will explode. People who understand what's happening will move wealth into hard assets. People who don't will watch their savings evaporate. This isn't fear-mongering. This is pattern recognition based on every previous currency collapse. Weimar Germany had winners and losers. The losers were people on fixed incomes, people with cash savings, people who trusted the government. The winners were people who owned real estate, businesses, commodities, and gold. Zimbabwe had winners and losers. Venezuela had winners and losers. Every currency collapse creates a massive transfer of wealth from those who held paper to those who held assets. The question isn't whether fiat currencies will fail. History answers that question definitively. The question is when, and whether you'll be prepared. On September 11, 2025, China's gold reserve stood at 73.96 million ounces, marking the 9th consecutive month of accumulation. In October, they added more. This pattern will continue, month after month, year after year, until either the dollar stabilizes or a new system emerges. The architecture of the post-dollar world is being constructed right now. BRICS pay. Cross-border yuan settlement, gold accumulation, alternative payment systems. Each piece fits into a larger framework, and when that framework is complete, the dollar's dominance ends. This isn't conspiracy theory. This is observable reality. China publishes gold purchases. BRICS announces new initiatives. Central banks report reserve diversification. The data is public. The pattern is clear. Only the timeline remains uncertain. History shows that reserve currency transitions are inevitable. The dollar replaced the pound. Something will replace the dollar. The only question is what and how much chaos accompanies that transition. China is betting on gold. Russia is betting on gold. Central banks across the developing world are betting on gold. The price signal is unmistakable. Smart money is leaving fiat and moving into the one asset that has survived every monetary collapse in human history. So what do you do with this information? That's a personal decision with no universal answer. But consider this. Every person in Weimar Germany who held gold survived. Every person who held only marks was wiped out. Every Zimbabwean who converted savings to hard assets before hyperinflation preserved wealth. Every person who kept savings in Zimbabwean dollars lost everything. The pattern repeats because human nature repeats. Governments overspend. Central banks print money. Confidence erodes. Currencies fail. Right now, you're watching the early stages of a potential transition. It might take 5 years. It might take 20. But the direction is set. China's gold strategy isn't destroying dollar dominance today. It's building the foundation to survive when dollar dominance destroys itself. History doesn't repeat, but it rhymes. and the rhyme scheme of currency collapse has been written thousands of times. The question is whether you'll hear it before it's too late. Consider subscribing if you found this valuable. Understanding these patterns might be the difference between preserving and losing your wealth in the years ahead. And if you think this matters, share it. Most people have no idea this is happening, but it is. Month after month, gold bar after gold bar, the pattern continues. The only question is, will you recognize it in time?